spoke about data, you spoke about IT as a big opportunity. What are the other sectors where you think you can see a lot of opportunity for a fund manager like you?
The other spaces, obviously, that we haven't spoken about are around the consumption-related companies. India has quite a lot of very interesting consumer staple brands, which are also seeing very significant growth. So that's a space that we consistently, that we constantly look at and monitor as well.
But aren't you worried about some of the valuations of most of these consumption stocks? I mean, barring IT and HUL, most of the other stocks seems to be trading at a very high valuation. So is that a barrier for you, or you're ready to pay that sort of premium for such high growth companies?
No, I think you've absolutely hit the nail on the head. I think that I think some of the valuations are a little bit rich, but in times of volatility, it allows us to look at some of these more interesting names and look to see if the valuations are out of sync from the core fundamentals. But certainly, the valuations in the consumer space are a little bit rich. But outside of that, there are also other companies in India where these companies have formed very strong competitive advantages on a global standpoint, and they don't just need to be IT companies. And so some of these companies are of interest to us as well, because we see them as being quite critical in global supply chains and in terms of delivering as growth starts to pick up globally as well.
So within consumers, will auto fit into that space? Because there are some of these auto companies which are really looking at scaling up globally as well, the likes of Hero, Bajaj Auto, everyone. Is that something which you're looking to explore, or that's not on your agenda at this point in time?
So the two-wheeler and the four-wheeler space is also very interesting to us. The two-wheeler space, such as Hero, we've looked at from time to time, and we certainly hold some of those stocks in some funds. But again, the valuations for some of those names are looking kind of stretched as well.
Okay, the big theme or the big question to ask you is, while the government has been disciplined in terms of fiscal deficit numbers, the big disappointment for most of the investors globally has been on the little bit of lack of reforms. The GST is still not passed, the bankruptcy code is still not passed. As a global fund manager, what are the key things that you're watching out for, which you think India should deliver to achieve that growth of 7.5%?
I think the most important thing, firstly, is for government spend to continue, particularly on infrastructure, as I said before, and the importance of that to India. But at the same point in time, I think from a monetary standpoint, India also needs to be a little bit more accommodative so that you don't crowd out private investment in the economy as well. So we look at a balance of both of those. We look at government expenditure that is taking place and the sectors that it's taking place in, and the pace at which it's taking place, and on the other hand, we also look at private investment. But for us at this point, given how the portfolio is positioned and the stage of industrialization that we think that India is at, the stage of development, we think government spend is a lot more important at this point.
But you think that's happening? The government spending is happening? Because there is a constraint to what government can spend, and as you rightly pointed out, the private capex is yet to pick up. In that mix, you think there are signs of government spending picking up? Yeah,
there's pockets of it. If you look at certain segments in the economy, such as power and things like that, you are starting to see it coming through. So I think it's really critical to focus on what the priority for the government would be, and how we can invest in that space as well to see longer term growth.
You spoke about some of the PSUs which you hold into your portfolio, the likes of Power Grid and BHEL. Apart from that, in the PSU basket, anything which stands out because of the fact that the government is going to spend more and those companies are going to benefit? Anything that stands out in terms of opportunities for you?
I mean, there are other companies that benefit from the infrastructure spend as well, such as L&T. That's another company that we've been looking at. Okay. But those are the main ones that we focus on.
So what is an avoid for you as a fund manager into India? What are the sectors that you think still are not out of the woods and you'll completely avoid at this point?
I mean, our natural bias is to is to not focus entirely on commodities-based companies. So some of the commodities-based companies, we think that there's still some level of uncertainty. And then, as you highlighted, in the banking sector, there is some concern around NPLs, and whilst that's not a natural place for us to be, it is something important for us to look at in the context of the overall Indian economy. And then you have the pharma space as well, which has been seeing some regulatory issues from the US and stuff. So we keep an eye on that space, because some of the companies, the pharma companies in India, are very strong globally. But we need to see how these regulatory pressures play out as well.
Sure. You spoke about commodities, and you handled in the fund the biggest exposures into China. A bit on China as to where it's headed, and this commodity slowdown, is that going to continue in your eyes?
I think a lot of the slowdown that you've seen come through in commodities has largely taken place. But what I think is interesting in the context of China is China has seen a pretty dramatic shift away from being a goods and services-based economy, rather being a goods-based economy, more towards being a services-based economy. And so, whilst a lot of people do focus on manufacturing and they focus on the industrial data, if you look at the services-based data that's coming out of China, the growth is actually looking quite good. And so in China, we've focused a lot more on focused a lot more on companies that have strong competitive advantages in the services-based space. So whether it be companies like Baidu, which is a dominant search engine platform in China, or whether it be the life insurance companies again in China, for us that's a much bigger part of the portfolio.
So for emerging markets, for the rest of the year, what to your mind are the key risks that you'll be watching out for very closely?
As I said before, I think the key risk is really going to be looking at how the US Fed looks at the rate cycle. I mean, they've said that they're going to be a lot more cognizant of what's going on in emerging markets and the impact it's having. But how the emerging markets do react to that is something that I think is going to be quite important coming into the back end of 2016.
Okay. My last question, Gary, before we wind up the show. What sort of returns do you expect from countries like India and China for the rest of the year and probably for the next 12 to 18 months? Tough to answer?
That's a tough question to answer.
Still, if you can just give us a broad view as to, do you expect a double-digit kind of returns from countries like India and China? Or it's a wishful thinking?
I think you'll probably be short of double-digit growth, but at this point in time, I think that there's still a lot of uncertainty that needs to be borne out in the near term.
Sure.
But as I said before, that creates opportunities for longer-term investors, because we don't necessarily look at things on a 3 to 6 month basis.
Sure. So will you look at increasing your India exposure? I know you're a little over in India at this point in time, but are you looking at are you seeing a lot of opportunities, which means you're going to increase your exposure into India?
We focus a lot more on companies on a bottom-up basis rather than making decisions on a macro basis. But on a bottom-up basis, there are very interesting companies in India which are very relevant on a global context. And so, I think it's a very interesting space. Yeah.
Great, sir. Thank you, Gary. Thank you very much for joining us.
Thanks very much,
Thank you
Nimesh.
very much. Thank you.